Hi lads, I'm going to go through the 2011 club account, which is a 100-mark question. We're talking about Glen Tennis Club here. The question is on the screen now, so Glen Tennis Club is what we're talking about. So, just going to go what we've been to the bottom of the question first of all. What we're being asked for? We're being asked for the club's accumulated fund on the 1st of January. That's worth 30 marks. We're being asked for an income and expenditure account for the year 2010, and we're asked for the balance sheet at the end of 2010. Then there's a bit of theory for 15 marks. Very important, you do not miss out that theory. So how most club accounts work, basically up the top here you have at the beginning of the year, so this will make up the bulk of the accumulated fund. Then you have receipts and payments for the year. This will help us with the income and expenditure. And then we have notes at the end of the question, which will help us with the balance sheet, but also some of these notes will be for the, there'll be one or two for the accumulated fund and one or two for the income and expenditure. So first thing I would always do, look up here and we'll mark off whether we have assets or liabilities for our accumulated funds. So we have clubhouse and courts would be an asset, equipment would be an asset, bar stock would be an asset, bar debtors would be an asset, bar creditors would be a liability, life membership would be a liability, the levy reserve fund would be a liability, wages prepaid would be an asset, and subscriptions due would be an asset. So those are the things we have so far. We have 1, 2, 3, 4, 5, 6 assets, 3 liabilities. With the accumulated fund as well, we are also looking for our opening bank balance. So in this case, we look at the receipts or the payments. It's on the receipts side, so it's an asset of 1140. That's at the beginning of the year. This is our bank balance here at the end of the year, 45180. So there's another asset. Principal things we were looking for as well in questions for the accumulated fund. We're going to be looking at the investments and we're going to be looking at the loan. These are the key things that are generally in the accumulated fund. Sometimes there will also be a transfer from building society, but not in this one. So we're going to look at those. So a couple of notes. I'm going to fill in the accumulated fund, do the notes on investments and the notes on the loan. So we shall go to accumulated funds. So I'm just filling in from what I know. So clubhouse is 250,000. Equipment is 75,000. Our stock is 15,000. Our debtors 1280. Wages prepaid 400. And subs due 500. And bank balance 1140. Okay. I'm also going to deal with investments and levy due in a second, but I'll fill in the liabilities. Creditors 8400. Life membership 24,000. And levy reserve 20,000. And I also have a loan interest. We're told the loan interest, but we're going to have to fix that. So let's look at the notes first of all. We'll deal with investments. So I have note 1 up here already done. So if we look at the question, first of all, let's look for investments. We're looking up the top here for any investment interest due or prepaid. There's nothing there. I'm looking here for interest from investments, 4%, 1,500. And I'm also looking at the notes at the end. Is there any mention of investment interest? Yes, there is. Investment interest due at the end of the year, €500. So there's nothing at the beginning. We have 1,500 received during the year and another 500 is due. So that tells me that the amount of interest for the year for the income and expenditure account would be 2,000 in total. 1,500 plus 500. This 2,000 equals 4%. Okay, because we are told the investment is 4% investment. We're told it right there, 4%. So it's the 1,500, but plus the 500. So 4% equals 2,000. Therefore, 100%, 2,000 divided by 4 multiplied by 100 gives us 50,000 for our accumulated fund and our balance sheet. So back to the accumulated fund, investment is 50,000. Okay. The last thing here in the accumulated fund, if we look at our question, I'm looking for stuff from last year. Generally in the subscriptions tab, look here, levy of €100 on 8 members for 2009. That's last year. So €800 is the levy due from last year, €800. So that gives us an accumulated fund of assets of 394,120. We just need to do the note now on the loan and the loan interest. So let's take a look there. This is a very common note. You have a repayment of a 30,000 loan. So they've told us how much the loan is in this question. So let's go straight to loan and put in 30,000. Okay, easy. The loan was repaid on the end of September with 15 months interest, and just a bit of mental arithmetic here would tell me that the loan interest, as the difference between the two, would be 3,960. So that 3,960 is 15 months interest. We paid off the loan end of September. So for this year, for the income and expenditure, 9 months would be this year, which would mean 6 months would be for the accumulated fund. So 6 months. So we're going to divide this by 15, multiply it by 6 in order to get the accumulated fund figure, and multiply it by 9 in order to get the income and expenditure figure. It would be a expenditure. So the loan is 30,000, interest 3,960. 3,960 equals 15 months. 1 month, therefore, is 264. We know 6 months is for accumulated fund last year, 1,584. 9 months is for this year, 2,376. So let's go back to the accumulated fund, 1,584. There is the answer to our accumulated fund, 310,136. We add up our assets, we take away our liabilities, gives us the answer. That is worth 30 marks out of the 100. Let's move on now to income and expenditure. Now, with income expenditure, I'm generally taking most of my figures from the receipts and payments. Remember, never sale or purchase of fixed assets never go into income and expenditure. Never. They do not go in, but their depreciation does. So generally with the income and expenditure, you're going to have 2 big ticket items. These are going to be your bar trading account or shop trading account. So in this case, we have a bar. And they're going to be your subscriptions. These are going to be 2 hefty enough notes, and then everything else is coming from here. So we're going to look at the receipts. We're going to have the bar, okay? We're going to have catering. We work out whether we make a catering loss or profit. In this case, we got 12,700 in. We spent 15,800, so that's going to be an expense because we spent more than we brought in. We're going to have a subscriptions note. We have sponsorship, and we sold equipment, which remember does not go in. However, looks like we made a loss on that equipment, so that loss will go in. Then payments, we have bar purchases, that's included with bar. Sundry expenses, that's going to be an expense. Loan interest is going to be an expense. Equipment, no, but depreciation, yes. Catering costs, we've talked about. Prize bonds, now this is going to be a balance sheet item. Coaching lessons, yes. Travel expenses, yes. These things are all going to go into income and expenditure, and there's going to be some notes as well. So first of all, I'm going to deal with I have the list here of incomes and expenditure. So we're going to have bar profit, we're going to have subscriptions, we're going to have investment interest, sponsorship, life membership written off. These are common enough incomes. Expenditures are going to be sundry expenses, loan interest, catering, in this case it's a loss, coaching lessons, travel expenses, and depreciation of equipment, depreciation of clubhouse, loss in equipment. So some of these are very easy. I can just put them straight in. We've already done investment interest. Here we go. Note 1, which was 2,000 income. So put that in, 2,000 income. Annual sponsorship can go straight in, 7,500. The other three, we're going to have to do a calculation. Expenditure, we're going to have to do a calculation for sundry. Loan interest, we have already done. The loan interest figure was 2376. Catering is a loss, so we can do that here. It's an easy one. We don't need a note. It's 3,100 loss. Coaching lessons can go straight in, 3,500. Travel expenses can go straight in, 10,000. There's no notes on those. And then we're going to do depreciation of equipment, depreciation of clubhouse. The loss on sale of equipment is easy enough. It's just 4,000 minus 2,500. There it is. So 1,500. So we have a few notes to fill in these gaps. So first of all, let's have a look at the bar. So anything to do with bar. If we go back to the question, I'm going to highlight these here in blue. Okay, so I'm going to highlight. So we have up here, bar stock, bar debtors, bar creditors. This is all at the beginning of the year. Then we have bar receipts, bar purchases. And down here we will always have bar stock and bar debtors and creditors again. Okay, so that's all our bar stuff. So we have our bar receipts, take away debtors at the beginning, add debtors at the end, gives us this figure. Then we have our opening stock, we have our bar purchases, take away creditors at the end, at the beginning, sorry, add creditors at the end, gives us this figure. Take away our closing stock, gives us our cost of sales. Sales minus cost of sales gives us our bar profit, 32,620, which is obviously in income. So 32,620. 32,620. Important part here is your debtors and creditors. Don't forget them. So take away debtors at the beginning, add debtors at the end. Take away creditors at the beginning, add creditors at the end. Okay. Next note is subscriptions. So I'm going to highlight everything to do with subscriptions in pink. So we look up the top. Do we have anything? We have subscriptions due, 500. Then included in subscriptions note, we have subscriptions, 84,000. Then we go down to the subscriptions note. There are 4 things that we're going to add into subscriptions. Sorry, not add in. We're going to deal with subscriptions. Generally, we're taking away. So we have 2 life memberships, subscriptions for next year. We have a levy from this year and a levy from last year. And this is how we deal with those. So we have 84,000 received. Take away subs due at the beginning of the question. Take away subs prepaid at the end of the question. This is from the note. Less the life membership, 2 new life memberships. Less the levy from 2009, less the levy from 2010, which gives us a subscriptions figure of 56,400 income. Now, one thing, this life membership here, Okay, how did we get 6,000? Well, it tells us in the question that 2 life memberships were bringing membership up to 10. So we had 8 life memberships already for 24,000. That tells me 24,000 divided by 8, one life membership is €3,000. Okay, so 2 life memberships would be €6,000. So I have all that now. I have my 56,400 is my income. 56,400. Okay, now with regard to the notes in the subscriptions part here, I'm going to have subs prepaid at the end. This 300 is going to be a current liability. Any other things, we'll deal with the levy and the life membership at a later note. So 2 notes missing: life membership written off and depreciation of equipment and clubhouse. So we will look at the depreciation first of all. So first of all, equipment. Let's look at the question. We have equipment up the top of 75,000. I'm going to highlight this in green. 75,000 equipment. We sold 4,000 worth of equipment, and we bought 8,000 worth of equipment. So the depreciation is based on 75,000, take away 4,000 plus 8,000, and it's 25% of that, which is 19,750. That's an expense, and it's also balance sheet. So 19,750 is an expense, and it's also a balance sheet figure. Clubhouse now. More straightforward. There's nothing mentioned about the clubhouse. It's just 250,000 times 2%, 5,000. So again, expense and balance sheet, 5,000. Down here. We have also mentioned the loss on sale of equipment of 1,500 loss. So that's an expense. So I think we've dealt with it already. Okay, note number 6, the life membership. So if we look at the notes, this note here, life membership to be written off over a 5-year period commencing in 2010. So we have life memberships of 24,000 plus 2 more life memberships takes us to 30,000 life membership. Okay, so life membership 24 plus 2 more life memberships takes us to 30,000. However, we write this off over 5 years, which means we take away 6,000, which is an income every year, which leaves us with the balance sheet figure of 24,000. So income, 6,000 euro. One more note is the sundry expenses. There is a note at the beginning which says wages prepaid. So wages is one to look out for sundry expenses. Those wages have to be included in this year's figure for expenses. So it's an easy enough note. It is 24,000 plus 400. 24,400 is the expense. So look out for wages at the beginning, at the end, also maybe light and heat, ESB, those kind of things. So 24,400. So let's add up the income. We get 104,520. Let's add up the expenditure. 69,626, which gives us an excess of income of 34,894. So highlight this figure, and we must call it It's not profit, it's excess of income over expenditure. 34,894. Now this is worth 35 marks. Okay, let's go on to the balance sheet. So we have done all the notes we need. We just need to fill in the balance sheet. So we have clubhouse and courts. 250,000 is our clubhouse and courts. Then we have 5,000 depreciation, which gives us 245. Equipment, likewise, we have 79,000 worth of equipment. We have 19,750 depreciation, gives us 59250. So our fixed assets total 304,250. Our government investments we worked out at the beginning, 50,000, gives us assets of 354,250. Okay, I'm just going to total these to make it tidy. Okay, I'll tidy it up. So a double underline on these. Okay, so we have 354,250. Now, our current assets. Closing stock we are given, 13,300. Debtors, so this is bar debtors, 300. Bank, so go back to the question. You're looking down the bottom of the receipts and payments. So here it is. It's on the credit side, which means it will be brought down on the debit side, which means it's a current asset. So 45,180. 45,180. Investment interest due. This was from note 1, remember? Let's go to investment interest. Investment interest due at the end. I should have marked there. That's balance sheet. €500. And prize bonds comes from the payments. It's 4,400. So our total assets 63680. We have bar creditors of 8,600, and we have subs prepaid. This subs prepaid is from the subs note here, €300. This is total creditors of 8,900. So 63,680 minus 8,900. So 63,680 minus 8,900 gives us 54,780. We'll add that on to the above figure. So 354,250 plus 54,780, 409,030. This is our total net assets figure, 409,030. So let's balance it off. This is from, so life membership we worked out from the notes. Remember, life membership is 24,000 because we had to write off. So 24,000. Our accumulated fund at the beginning, we look at 310,136. 310,136. Our surplus of income is 34894. 34894. Our levy reserve, with one more note for levy reserve. At the beginning of the question, we had levy of, I shall highlight this in, I don't have any colours left, yellow. So I had levy reserve fund of 20,000, and then this note here, I had a levy of 200 members of €100 each, which is another 20,000. So 20,000 plus 20,000 is 40,000 to my balance sheet financed by area. So levy reserve is 40,000. When we add all this together, you get 409,030, which balances with the above figure. So 99 times out of 100, if this balances, it's going to be correct. That's worth 20 marks. So we have 30, 65, 85 so far for doing the accounts. There's 15 marks left for theory. Do not forget about that. That's a huge amount of marks. So 2 limitations of the receipts and payments account. First of all, 2 limitations of the receipts and payments. Then the club is considering the installation of floodlights at a cost of 70,000. What advice would you give the treasurer of the club? So let's have a look at the theory. First of all, limitations. Receipts and payments does not show whether the club is raising enough funds to cover its running costs. All the receipts and payments shows you is the money coming in and the money going out. That's it. Amounts due but unpaid at the end of the accounting period are not included. It only shows an increase or a decrease in cash, although there could be outstanding bills. Doesn't show us that. Does not take into account depreciation. Does not show whether the club bar or restaurant or shop are profitable. And it does not distinguish between receipts for the current year and other years. Okay, so you're going to need 3 of these at 2 marks each. Then finally, 70,000 is what the club are talking about for floodlights. So you are asked to advise the treasurer. So you're going to have to probably do some calculations. You're going to have to look at the information that you've worked out already and decide whether you think it's a good idea. So in this case, you're saying, yes, I would advise the treasurer to go ahead, and give your reasons why. The improved facilities would allow longer use of the club courts, resulting in added income. This could enable the club to increase its membership and thereby increase the annual surplus of income, as well as greater usage of restaurant and bar. So that's common sense stuff. The club is in a strong financial position. It has a surplus of income of 34,000 in the current year. So in nearly 2 years, they would have paid back the floodlights. It's increased its bank balance to 45,000, and this is after paying off a loan of 30 grand. To fund expenditure, the club could use their cash balance, the prize bonds, and they also have an investment fund. The club should avoid using any of the funds raised through the levy, as this may be earmarked for further expenditure in the future. So this is what they have. They have 50 grand investments, 4,000 in prize bonds, a bank balance of that. So they have more than enough money, really. And they could easily borrow money as well. So this club is in a well-off position and you should recommend that they do go for the floodlights. Okay, that's basically it, lads. Do not forget the theory, though.